you advised everybody to buy some Bitcoin, and that Bitcoin has a lot of runway left. I have said on the show for a while that I was skeptical of this Web3 idea that you can build on top of the blockchain, and I'd love to hear your thoughts on that. But to me, I think that Bitcoin running up to it's at 101,000 per Bitcoin right now is pretty remarkable, and has the fact that it has surged even as a lot of the Web3 hype has collapsed. Maybe it follows that path that you were talking about, as to like things fall off after 1/3 of the way through the cycle, but something ends up coming through. So I wonder if Bitcoin is like that in your mind.
I think Bitcoin's utility is going to go up exponentially in the next 10 years. So one of the reasons Bitcoin has risen to 100,000 is just simple network value. When we first wrote about Bitcoin in 2017, and Bitcoin was under 1,000, we had said it could get to 25,000 by 2022 because it's a network value asset. So we just said, if you model number of wallets and activity per wallet, which explained 90% of the move of Bitcoin from 2009 to 2017, you would get to 25,000 2022, and you can get to the six figures later. And that's true. It's still like 87% explained by those two variables. But Bitcoin is now about to become a lot more useful for two reasons. One is it's becoming less regulatory burdened, right? The White House is really creating it as a strategic reserve asset, and companies are putting it on their balance sheet because it's the way people used to have real estate owned in retail. Like, that wasn't a thing, but then people realized it was valuable to own the real estate. Like, some retailers are more valuable because they own the building. That's what Bitcoin is, your working capital is. But banks are also quite interested in Bitcoin because of stable coins. So stable coins might be the Web3 app that's really recreating financial services, because one, a stable coin works better than a regular dollar.
You don't have to send it through middlemen to transfer
Yeah,
it.
that's right. Now, if you want to move billions and trillions, you just use the stablecoin market, and it's proving to be more profitable for a bank. Circle, like, I won't comment its valuation, but as a net income, or Tether is a better example because it's not public.
How do you trust those Tether people? Like, you don't really know what's going on.
Well, that's where, see, this is where blockchain comes in. Blockchain has proven you don't need to know the counterparty. You just have to trust the code.
Mm-hmm.
And so Tether, from a net income basis, makes more money than most financial institutions. I think would be the third most profitable financial institution in the world.
Wow.
So what's a better bank, right? What's a better financial services model? Is building it on the blockchain. So I think stablecoins is the killer app that's proving, because Bitcoin anchors everything. Because you don't need a stablecoin unless you had Bitcoin. So Bitcoin and building financial services on top of stablecoins, and financial services companies are getting it now. Even Walmart and Amazon want a stablecoin because it's actually quite profitable to have one. That you are changing the financial system through crypto.
So Bitcoin's not at the top.
Yeah. So if you again model this out and utility, because remember, stablecoins is only a $250 billion market today. So you realize that stablecoins collectively are the 12th largest holder of U.S. Treasuries. They own twice as much as Germany, for instance.
Wow.
So the U.S. government does, in fact, want stablecoins to proliferate because it's a guaranteed long. Stablecoins never have declining assets of U.S. Treasury markets. And dollar dominance. Its dollar dominance is only 27% in GDP terms. It's 88% in traditional financial market trading. 80%. It's 100% of the quoted pair in crypto. Dollar dominance is stronger in crypto. Stablecoin usage is only 20% in the U.S. Almost 60% of stablecoins trading takes place in Hong Kong, China, and Japan. So you can see that it's creating more demand for dollars outside the U.S.
And then therefore, Bitcoin will continue to go up?
Yeah, because Bitcoin secures the entire blockchain.
I want to run an idea by you that's come up in some of the discussion around artificial intelligence and tech. And this idea is that if AI progress stops or collapses, that could be a black swan event, because you have the valuation of some very big companies being held up on the expectation that AI is going to work. NVIDIA, Microsoft, well, not Apple, but Meta has definitely played there. Alphabet is getting, I think, probably, well, maybe mixed reviews on AI because it threatens search. But a large part of what people call the Mag 7 has had a valuation bump because of AI. And then you think about the private funding. I mean, SoftBank is in the middle of, we think this 40 billion, they're going to deploy $1 trillion into AI, 40 billion into OpenAI.
Yeah.
And a lot of this is based on this expectation that AI will do people's jobs and become like the equivalent of human beings in many different disciplines. If that doesn't work out, then the bet, I don't want to say goes to zero, but doesn't work out. There are probably a lot better ways to put that money to work. So is it possible that an AI stall leads to another black swan event, or is that overplaying the AI story?
I mean, I can picture some black swans driven by AI.
Yeah, talk about them.
So AI could create a black swan if it's too successful, because it's going to create PhD level workers at a cost that breaks all economic models, right? I mean, what is the value of our work if something that is not us can do it better? And then if it's combined with like a robot, then it can complete all tasks and never tires, never needs vacation. It'll outperform every human. And in that world, and of course, if it gets sentient, then it really is a threat to like our modern civilization. Or it could even make the definition of money unimportant, because robots don't care about money, right? So that, I think, is like one black swan outcome, is that it's terrible. But what's the percentage? Of course, guys like Elon Musk and a lot of the books written about this, like The Coming Wave, put the odds low because humanity hopefully intervenes. The second way it's like that you've described, the setup is that the bubble bursts in AI. And I think that's going to happen for sure. Wireless and internet already give us the template, because wireless was an exponential growth industry from 1990. And the growth didn't slow till, let's say, 2015. So it was one generation, 25 years of compounding growth of 40%. The wireless ecosystem, from infrastructure, handsets, software, carriers, the towers, all peaked 1/3 into the cycle relative to the S&P. So they all became market performers. They peaked all at the same time. Nothing will break away. But then 10 years into the cycle, two groups broke out of wireless and captured the value. The tower industry, which was like a 10-bagger relative to everything else, and Apple, which was late. Apple was only a second chapter wireless story. So to me, the AI story is everything's going to peak at the same time, probably 1/3 into the cycle. But then in that period of consolidation and shakeout, then one or two industries truly pull away and capture the value again.
And so what does that shakeout look like? Seems like it could be ugly.
Oh, yeah, it's going to be... Well, we know that you have to create capital loss for investors, like the internet bubble bursting. So when the internet bubble burst, it only triggered a mild recession. That was like in 99, because the loss was concentrated in tech mainly and some telecom, and it really hit some geographic regions very specifically. The reason we had a bigger recession after that was because of 9/11, but it really would have been a mild recession. Like that's why the GDP data was fine, and actually like 90% of stocks were doing okay. In fact, small mid caps actually positively gained during that period of time, because the internet bubble bursting didn't take down the economy. I think if the AI bubble bursts, you're not winding the clock back to zero, but it may have burst because it may be bursting because someone decides to do containment, like pull the brakes on this and saying like, we're too close to generative AI or we're too close to sentience.
I mean, artificial general intelligence.
Yes, sorry.
Do you think that this industry is even capable of pulling the brakes? I don't.
I think people are going to have to make some decision because you're right. I think AI safety, like if we look at employment in AI safety, I think it's not even 1% of all jobs filled. If you look at the financial industry and say classified job as safety, it's more than half of the jobs is safety. So the AI industry has to invest in safety. But you're right, there's like zero incentive for safety right now.
Because the financial industry doesn't have like an open source version of finance that's trying to build the same thing and give it away. And it's sort of keeping pace with their innovation.
Remember, a robot gets paid the same salary in every country. It is a completely what I would call a fungible commodity, right? It's not, there's no pay differences. So whoever can make a robot that does this is now exporting a global labor force.
Yeah.
And of course, that means you can bring a lot back to the U.S. too.
So my sense is that China is pretty far ahead on humanoid robots.
Yeah.
When you look around the world, do you have a sense as to where these might come from?
Yeah, it's going to only be 3, maybe 4 countries. It's China, USA, Japan, and Germany. Now, I would say over time, there is going to be concern about the ethical safety of a robot. And that's why I think a Western developed robot will be more widely adopted than a non-US one. You know, because you never know if there's like a hidden like switch that turns it into murderer, you know, or one that turns it into spy. You know, a hidden chip, hidden code. So I think that's why arguably China's AI is way ahead of the US because they've had better surveillance and therefore their robots will be more intuitive. But then, you know, can you trust 1 million of these robots in America? You know, like.
Yeah, go ahead.
I'm not trying to be a conspiracy theorist. I'm just saying.
These are real issues people are going to have to deal with.
Yeah, I think provenance matters, you know, because it's provenance. Is this like a sleeper spy? So.
This is my sort of crackpot theory of the case, but I think that we are underestimating when we talk about humanoids how violent human beings will get against them. We just saw in LA there were this burning of the Waymos. You can look at that at a bunch of different ways. I think it's being underappreciated how that is in some ways a symbolic revolt against automation and big tech. And if you, let's say, okay, just putting this in a story context, you work in a factory. A humanoid robot comes in and takes your job. The next day you see a humanoid, let's say delivery robot, walking down the street. You can't provide to your family anymore. You know that thing has cameras on it. You don't care. You're tipping it over at the very least.
Yeah.
If this happens, it'll be the most difficult tech rollout we've ever seen.
Yeah, because you're exactly right. There's going to be a distributional consequence of a robot. So until we get to that world where someone says there's abundance, there's first displacement. And yeah, if people are displaced and they can't be reemployed and they're idle, why wouldn't they be angry, you know? So it's
the history of the world. That's what happens.
It could be organized sedition. Like people could be trying to blow up robot factories or sabotage robots have to charge. There's probably going to be real estate where robots go to get charged. So that's maybe where people, attack.
Yeah.
Where robo-taxis park, who knows? You're right.
We've already seen it in some ways with the Teslas, although that's kind of totally unrelated. So let's look into your crystal ball for a moment and talk a little bit about what's going to happen in the near term with the AI wave. So it is interesting. I've heard recently that there's a real dispersion in terms of where the gains are coming from in the Magnificent Seven in this AI moment. So if you look at the companies that are up, you have NVIDIA up 7% year to date. Meta up 13% year to date. Microsoft up 15% year to date. The companies that are down: Amazon down 5%, Google down 15%, Tesla down 15%, and then Apple down 17%. And if you're trying to assess, like, well, I mean, obviously it's not all AI related, but the ones that are up definitely have the better AI story. So do you think that we're going to see like the Magnificent Seven sort of split off into the AI winners and AI losers?
There's definitely going to be winners and losers. Some of the loser categories will turn into winners. Some of the winners will turn into losers because we were deceived because something forked.
Okay.
One name you probably didn't mention, but should be considered an AI winner, is Netflix.
Oh.
Because of course Netflix is probably using a lot of AI as not necessarily a producer of AI, but it benefits from it. But it more reminds me of Domino's Pizza. So like the theme of the last 20 years has been there's been a labor shortage around the world, and that's why like wages are higher. So you'd think staffing stocks should have done better, but like stocks like Robert Half have underperformed the S&P. So like if labor was a theme and you bought Robert Half, you lost money. But if you bought Domino's Pizza, you bought one of the 5 best performing stocks over the last decade. So it was better to feed the worker than to supply the worker. Netflix is more like a Domino's Pizza story.
Interesting.
Yeah. But Apple, like, for instance, is interesting because I know maybe it's derating because they think, well, they're not in front of robots and they're not in front of robotaxis and they're not leading in AI. But, Apple might do what they did in 2007. They weren't cutting edge on making the first mobile phone, but they, in 2007, after the bubble burst, introduced the iPhone. And so maybe they'll wait for AI valuations to come down or the innovation curve to slow, and then Apple gets the best and takes the lead.